morning. I'm trying to say good morning, so I don't know. Stop. I don't want 1 month free of okay. I'm up on the TrendSpider. TrendSpider, it is, hit the thumbs up. And because it does help. I guess it helps. I don't know if it actually helps, but I guess it helps. And I almost tripped over my cord again. Let's start Active Trader Pro. TrendSpider is up to 50% off if you did not get in on the sale, then you missed out. But it's still, again, it's only $429. It's like $30 more expensive. So you didn't miss out on a bunch. You just don't listen very well. Because if you're joining right now and you haven't gotten TrendSpider, and $429 is quite a bit of money. I completely understand, but I'm telling you, if you trade, if you invest, it's worth it. TrendSpider is so good, and we'll go over the charts. I'm going to teach or show tax loss harvesting from the standpoint of my own personal portfolio today. So, but I've got to make it a quick episode. So I might do this in 2 parts, some today, some tomorrow. But let's see about some scans. Because I just want to show some examples of what I'm kind of doing. So I'm going to go over here to Safari. Close Chrome out. And we'll go to our scans. We're going to go to Market Scanner. Our daily stock pick scanner. We'll go up to core investments and see if anything's scanned. Oh, UNH. Man, there's so many scans that opened up. We're going to have to... Oh. UNH. TGT. J&J. SPG. KO. GOG. That's in our core investments. Oof. Let's see if any of the ETFs scanned up. VYM. Let's see if any of the spider sectors scanned up. XLC. Wow. XLI. XLP. And then, I see it, I'm sure, a ton crossed up. Ugh, Disney, Delta, I think that's all I want. I don't think I want Shift Technologies. No, that's a horrible chart. Let's go to all the ARC holdings. I don't see anything that I necessarily want there. Let's go to the Dow Jones 30. We've got all those. Let's go to NASDAQ 100. We're going to get a ton of those. Comcast. Where's that gap? 36. 40. I'm not going to bring it up. There's too many other good ones. Let's go to the S&P 100. Morning, Dawson. I'm trying to make this one quick. Disney, Coke. Oh, Duke Energy again. God, look at Duke Energy down here. Let's say D. Because that one, I know I brought that up. Okay. Now let's see if energy sector. EQT. We like that one. Okay. I don't think there's anything necessarily that I want here. So, okay, let me just make sure Active Trader Pro is open. And we'll look at... KOLT's losing. Boil us up. Okay, let's go to our strategy tester. This is the one. God, that's a great chart. Look at that at 88. We've talked about this one. What was the other one? Constellation, I think. CEG. Yeah, see, it's using the 200-day as its support level. Kind of a resistance. Resistance on the downside. Boom, boom. Sweet. By the way, Dawson, and anyone else who's listening, I've been so enamored with artificial intelligence this weekend. I've got 3 businesses that I'm starting with artificial intelligence. It's so easy. God, it's crazy easy. Okay. We're going to go in here. We've got our YouTube. Let me get Active Trader Pro up and running. Properties. TrendSpider, Active Trader Pro. There we go. Boom. I have noticed every time I switch my camera. Notice the camera. It's weird. Okay. We're going to go do this. I've got, Okay. I think I'm just early. That's why there's not a lot of people here. And then they're going to get on and they're going to bitch that I was too early. And it's too early in the morning for them to get up. Hey, James. Good morning. Okay. Let's go. I'm going to put your blankets out. Okay. You guys almost had another episode of me falling down. That was good, I thought. Okay. I am going to start this puppy up. Good morning. It's Tuesday, December 27th, the last trading day of the week. Or trading week. Last trading week of the year. It's early. I don't have too many people on YouTube Live yet, but this is going to be a little bit of a different episode. I'm going to start with kind of going over some stocks that I like, that I saw kind of on final trades on Friday, blah, blah, blah. Some things that I noticed over the weekend, but mainly I am going to go over I did a lot of work on tax loss harvesting this weekend. And full disclosure, I've got probably a good amount of, it's six figures of losses on stocks that I could probably allocate better. The majority of these are long-term losses, just ones that I've held over a year, not significantly long-term, but long-term as to over a year. So tax loss harvesting, if you want to know kind of, I went to Investopedia and how to deduct stock losses from your tax bill. Simple as that. This is not tax advice. This is me going over my portfolio and kind of where I'm going with the portfolio. I'm going to raise some cash. And so essentially I've got two reasons for raising cash. One is I want to trade more next year because I think we're going to be in a trading range. And I think trading is going to be beneficial. So I'm going to trade a little bit. And I need cash to do that. Second is I'm going to try and get some money to live on. Oh, man. Okay. Come on. In. Let's go. Into bed. Into bed. Let's go. Okay. And yeah, Tom's awesome, by the way. Just so you know, James. He's got, he definitely communicates quite a bit. But his communications are good. Just understand, Tom is very risky in a lot of things that he does. So, but I like his opinion. He likes me for my chart stuff, but I think Tom has some very sound reasoning in the Facebook group. So let me go back before I was interrupted by the dogs. Sorry, I was interrupted by the dogs, but I do need, so everybody knows, kind of, again, it's a personal episode. So I live off of trading revenue, and it's trading revenue from long-term trades. It's trading revenue from short-term trades. It's basically the entire portfolio. I don't work other than my Major League Soccer and jobs of that sort, where I do contract work. So that's, pays the mortgage, but it doesn't make me a lot of money. I need money to kind of quote unquote live. So that's two reasons why I'm going to tax loss harvest. And what tax loss harvesting is I'm going to take the losses. I'm going to sell some of my gains. So I will be going mainly over my personal portfolio today. And you know what? Maybe I'll just kind of hold off on the rest of it. Let's go over the first one that I probably am going to sell and where I bought it. AMD. Now, here's the killer. I'm not 100% sure why I'm selling AMD. Again, this was part of, I tell you guys, have a plan when you go in. I did have a plan. I didn't stick to it. And AMD just continued to fall. So essentially, I bought AMD at $83. I'm going to take quite a bit of loss on this one. And in order to counter that loss, I'm probably going to sell some Coke. And the reason I'm going to sell Coke, take a look at this. It just had a MACD cross up. It's got the ascending triangle. It's at 63.84. So let's take a look at Coke in FinViz. It is butting up against 52-week highs. The 52-week high is 67. Do I think it can go to 80? I don't know. But I'm going to take some profits on it because it's high. If I'm selling at a loss, and I'm selling at a pretty good low here, make no doubt about it. If we go back to we'll go back to a weekly. So you can see I'm selling below the 200-day on a weekly. It's not something I would typically do, but here's the plan. You can sell this and then 30 days later, buy it back. So you take the loss at the end of the year. 30 days later, you can get back into it. Say I don't like AMD. Say I like the chip sector and I sell AMD and I just go into Qualcomm. Again, tax loss harvesting is selling your losers, selling your winners to counterbalance that. And it's tax optimization. So AMD is the first one that I'm selling. AEO, I bought this one at about 20. This was a Kramer ad that I said, he makes sense. He made sense on this one. I had a 20% profit. I didn't take it. And I bought this right around, it's a long-term hold, I believe. It was November of last year. So it was probably around this 24 range, 25 range. I'm selling at the 15. I am going to sell some Microsoft where I've got significant gains in this. And you'll see Microsoft, there's this gap that hasn't been covered. So am I selling at an absolute high? No, I'm not. I am not selling anywhere close to an absolute high. I'm selling right on that 200-day again on the weekly. It's used that in November. It's kind of bounced above it. But again, if I want to buy, then I will probably buy in 30 days again. But I have the money on the sidelines and I'm able to counterbalance the AEO loss with some Microsoft gains. Now, these are going to hurt because I had 200% and 300% gains on these and I didn't sell them. First one's ARKF. ARKF, quite a bit of money in here. What I'm going to do is sell this. There is an ex-dividend date. I have to look it up. But ARKF, this is selling at the absolute lows. I'm not into Cathie Wood's hype train of, hey, hold on to it for 5 years, blah, blah, blah. I'm kind of over that. So ARKF, I'm selling. ARKG, I'm selling. This one, I've lost money on. Overall, ARKF and ARKG, both of them, I was up well over 100%. Didn't sell, kind of held on. Just bad trading. But again, this is me being personal with you guys, understanding that, hey, your wins come along with some losses. ARKK. ARKK, I am still up on. So I'm going to take a gain on ARKK against some of the other ARK losses. Comes out to be, a good amount of money that I lost overall, but ARKK is basically balancing me out. And I'm getting out of the ARK funds completely, and personal reason, but I'm getting out of the ARK funds completely because I think I can get back into them next year at a lower price, or something similar at a lower price. That's going to gain a little bit more. So it's reallocating your resources. ARKW, I still got a gain on it. Selling this one, it's a small gain, but it balances that ARKG and ARKF out. China opened up over the weekend, and boy, if you guys didn't see, the largest cemetery in China is up like 30% today in Chinese trading. I don't know the symbol. I'm not leading you guys into there. I don't know exactly what's going to go on in China. But essentially, there's one of three outcomes. If you're living in China or visiting China, you're either going to get immunity from a vaccine, a Western vaccine. You're either going to get immunity because you get the disease and you survive it, or you will die. Simple as that. And it's not it's worse than the flu. Essentially, you're back to 2020 in China. And a lot of people are traveling outside of China who are Chinese to try and get the Western vaccines. So that's probably good for mRNA and stuff. But BABA, I think it could come back. But I'm taking this loss, again, to sell against. I could buy JD.com. I could buy KWeb. I could buy a bunch of other things that are not related to BABA specifically and write that tax loss off. So I'll trade around this thing. I'll take the gains, take the losses, but I'm selling BABA. CrowdStrike. This is one that I've recommended in the past to trade. I personally traded it up around 180. It is a short term. I think it was in September I bought this, or maybe it was August. I had the chance to sell this for a 20% gain. I think I bought it at 170 something around this time, July. I'm taking the short-term loss. I'm able to do that just because I've got some other short-term losses that I can write off against it. But CrowdStrike, I'm taking the loss. The reason I'm taking a loss on this is not because I think it's at its absolute top or it's a great investment. It's losing money. Forward PE is 51. Price to sales is 11. The book value is $5.62. Their earnings per share expected to gain 32%. That's going to be brought down. It lost 143% this year. So year to date, you are down 50%. I just don't think it's done. And if I want to, I can absolutely buy other stocks in the sector with that money. So I can do that. DraftKings. If you guys didn't hear, they had a hack. Jim Cramer made a reference to DraftKings last week. And the curse of Cramer is on. They got hacked. So they're going to be down in pre-market. Let me just look real quick. Where's my portfolio? Brokerage holdings. DraftKings is down 1% at 11.14. I don't think this is a great sale. I was up. I bought this at about 40, so I'm losing significant amount of money on this one. But again, what am I going to sell in the place of it? I'm going to sell Exxon. And the reason I'm selling Exxon is because I can always buy Chevron if I think that oil's going to go up. I've been holding a significant amount of Exxon. And again, this is in my brokerage portfolio, not retirement. This is not a Roth. This is not a healthcare savings account. This is in my brokerage portfolio. So I've got all of these games. My average purchase price, I think, is $38, $39 on this. I'll take a lot, about 20% of it off the table to cover some of my losses. So ETHE, held on to this one way too long. Again, it's a long-term holding. It might be a short-term holding. I'm not quite sure. I haven't looked at my portfolio specifically on this one. I kind of forget. I didn't write it down. But Ethereum, I'm going to take the loss because I think these grayscale ones are trades, not holds. And so I got stuck in a trade here. I just don't want to hold it. I'm going to take the loss. GBTC, I'm playing with the house money. Essentially what happened in 2017, I believe, 2018. I paid my taxes on huge six-figure gains that I made in 1 month on GBTC by day trading it. And I paid the taxes, and I basically put it all in January 2017, 2018, wherever it was. Let me look at the chart. We'll go with a weekly chart. And yeah, it was around this time. I think it was January, where I bought this at 22. It's at $8 right now. I was up this summer on this one at 43. It was almost 50. I'm going to sell it for 8. You can believe in it. You can trade this one. I'm just going to take the loss. I get to write it off. It was house money. So essentially, I'm up overall, but I am going to be able to write some of the tax loss off. What am I going to sell in place of it? XLK. And this one hurts because it's the technology sector. So it's down. Let's take a look at the long term. I've been adding to this all the way, since 2014, somewhere in that neighborhood. So I'm trading it right on the 200-day. It hurts, but I'm selling that one. I am selling Meta, and not because I don't think that it's going to go up from here. Just I bought this one right before earnings, before that gap down. Let's look at a weekly. You know what? I'm going to look at let's look at a daily. I bought this one in February. It's probably a short-term loss. in February, right before this big loss. I'm going to take the loss on this one. Honestly, just take the loss, move on. I'll be able to trade this one in 30 days. Do I think it's going to get crazy good in the next 30 days? No. I'll be able to trade it. I'll be able to get back long-term into this one. Palantir is one. I just don't think this one's coming back. They are, and one of the reasons is valuation. Look at the valuation. They're not making money. The forward PE is 38. They're expected to grow next year by 264%. That will absolutely be brought down. They only grew by 58% this year. If we're heading into a recession, this is not going to grow. Year to date, they're down 65%. They're only 4% off their 52-week low. So I'm selling this one at a loss. 30 days, I may get back into it. I don't think within 30 days we're going to have a crazy sky booming market. So that's why I'm selling this one, taking the loss. Teradyne, super small position, but it's a long one. And I bought in during a peak. And just, this was about where I bought in. I think it was around 120. So it might have been February of last year. Or I'm sorry. Yeah, it was definitely last year. So probably around this time, I'm taking a loss at 85. What am I selling in place of that? I am just going to sell my XLY. And I'm not selling at quite a good time on this one either. Because if we go to the weekly, look, you just crossed the 200-day. This is consumer discretionary. I think this one is due for a bounce back. But I'm going to take some off the table and I'm going to sell XLY. Others that I'm selling to try and gain some balance out the losses are my Ruth Chris. This is a gain. It's a small position. I think this one's less than $10,000. But I bought in during the pandemic, right at about this time, I would say, at $5. We're at 15. It's a small, super small position, but I'm up over probably about, I think it's almost close to 200%. I'm up on this one. Another one that I'm selling is probably Tesla. And this one is probably my most controversial sell where I'm going to take some profits. And the reason it's controversial because I probably should have sold out here where it told me to get out at 180. We're at 120 right now. Do I think that we have more ways down? Take a look at this daily. And we're going to go back and we're going to look at those gaps that I always point to. And this gap right here between 82 and 85, that is probably in play at this point. We'll go to a weekly and you can see if I pull this this lever back to about May of 2020. You can see there is some volume shelf here at 105, but this is the main volume shelf right between 110 and 60. So I do think that we'll probably get down a little bit lower than where we are right now. And that's just an assumption. 30 days from now, I can buy back in. If for some reason they have some record announcement of deliveries in China, or they get back up and running, or there's some type of product announcement like the Cybertruck is ready to be delivered beginning of next year, something of that sort, I can always buy back in. This is a super, super volatile stock. So that's essentially the beginning of the week for me, is balancing this out and trying to figure out, okay, what am I selling going into the end of the year? Because remember, to tax loss harvest, you have to sell before December 31st. So, and December 31st, I think it's Saturday, so you have to sell this week. But there's the summary for you. A couple of things I wanted to go over. Weekly stock picks. Pick again this week. His pick is Merck, and Merck is a killer. And in fact, it was one of the final trades on Friday for some of the traders. And I think it was, I forget his name, the grumpy dude. But yeah, you have September 23rd, this $87 buy-in, and you have got an ascending triangle, 111. A lot of people think that this will continue to go up. If you take a look at this MACD, he's crossing up on the MACD on a 4-hour. So you'll have a secondary buy-in with an ascending triangle. I just think there's not a super reason not to buy this one. He's been super good. Go and look at my weekly stock on Twitter and on Instagram. I follow them both, so you guys can stalk my page and just look at what I look at, and you'll find him. Subscribe to his newsletter, because he's just, 2022 has been a phenomenal return for him. Plus, he's on the plus side. There are not many people that are on the plus side of this year. I am certainly not. Just went over all my losses. But Merck is one. That was a final trade. Another final trade that was interesting, 2 of them. Coke. It's at its, like I said, I'm selling this one. I'm probably taking 50% off the table. But I am up a significant amount. I've been holding this one. I think I went over it in an earlier podcast, but for years I've held this one. So I'm taking some losses here into an ascending triangle, into a cross up at 63.84, but it's right above its 52-week. It's just 67 inches 52-week high. I can't see myself doing it. Another final trade, which we had a cross up on, Disney, 88.03. This could be the darling of next year. If Shanghai reopens, if you get a streaming, there's some talk about Netflix and Disney being combined with Iger back at the helm. If you get something like that, this one's going to be crazy good. So it was a buy. This one in the algorithm, you lose 25%. Buying and holding, you lose 50% though. The problem with Disney, and I'll continue to point this out, is the valuation. The PE is 50. Your forward PE is 16. So they are going to grow into their earnings, but that's an assumption. Earnings per share next year expected to grow 28%. I'm not 100% sure that that's the case. Their streaming is just it's basically taking a ton of money. So that's one. One that was interesting, and I want to bring this up on my Twitter because it was Carter Worth posted this one. And I always say to you guys, Ford is a hype play. Look at this. 35-year Ford chart. Exact same price. Literally 35 years ago. 35 years ago in 87. Price was $11.36. On Friday, it was $11.36. You want to see a hype play on this one? Yeah, it's Jim Cramer hype play. Now, here's the thing. This is what's great about the algorithm is in a stock like this, you buy into the algorithm. The algorithm makes you 52% over 1,000 candles. Just buying and holding makes you 28%. So it's not a bad stock to actually invest in these days if you're going to make money. You have 28 positions, 25% wins. Your average win is 23%. So it doesn't have a MACD cross up, but you can see it's coming close into the earnings right there. And it's at a fairly low valuation right now. Because you look at this, let's look. Ford is at a 5 PE. If we look at a similar one, GM is at a 5.74. Look at Tesla, 37. Why am I selling Tesla? That's the reason. And that hasn't been a super big reason to do it over the years because you would have lost money. But it's a pretty good reason. I wanted to go over some of the scans because we had some amazingly strong scans this morning just based on Friday. United Health, and this is just I'll go over just the core portfolio. If you're a member of TrendSpider and you have my the Daily Stock Picks core portfolio list, you can do these scans. There were 1, 2, 3, 4, 5, 6 of them that I'm going to go over on the core portfolio that had basically cross-ups on Friday. United Health, not a super one. I say closer to 500, but with earnings coming up, you're probably near, making this one a $520 pivot point instead of 500 because it hasn't been below 500 since back here in July. It got about here in September. But that's the first one. Another one with a cross-up, Target. I talked about Target filling these gaps, 143. We saw from MasterCard this morning that consumer spending was up 7% over the holiday season. It was expected to be 8%, but 7% in my mind in this market is a hell of a better opportunity. Now you have these gaps up here that haven't been filled between 168 and 172. And then you've got this gap way back here up to 215. So I do think once you get on the upside of that 9-day, I think you can start to add to this one again. Hopefully you guys didn't blow all your money on this one. Oh, one thing I wanted to bring up, Wells Fargo. It's up at 41.18. Still hasn't really gotten the confirmation above the 9-day, but I tried to time it a little bit. Again, I bought, I think, 10% of what I was going to get into there last week. Another one that has a strong cross-up, J&J. This was one I considered selling. I do own this one. I considered selling, and the reason is when we go to J&J here, it's not the PE is 24, the forward is 17, but you've got a 2.55% dividend. Year to date, you're up 3%. You're only 4% off your 52-week high. My problem is that I don't have a lot of money in this, so selling it was kind of like, if I need a little bit, I'll sell some J&J. But we did have a cross up at 177.52. I continue to think that probably closer to 170 is your pivot point. It's only $7 if you're looking at it from a long-term perspective and just buying and letting it grow. I don't think $7 is something to keep you out of it. Simon Property Group, these are outlet malls, cross up at 117. It's not a great one. You're crossing up right on that oscillator. You've got the 50-day right there. Let's move this volume indicator back there. You're kind of building this gap. If you do lose this volume shelf right here down to about 115, I think the next volume shelf is 100. I'd probably feel better at about 110, but you're coming up on earnings, holiday earnings. I don't know if they're going to be good. I don't know if they're going to be bad, blah, blah, blah. We went over Coke. Coke is number 5 of the 6 that had a cross up. I'm selling into this ascending triangle. Don't ask me why. I'm just making a lot of money, so I need some of my gains to sell. And by the way, you notice I am not selling Apple. I may sell some Apple. My average share price, I think, is $5 on Apple. If I can sell just a few shares of Apple and take quite a bit of gains to write off. So I still don't think that Apple is fully valued in this market. So just my take. The final in the core portfolio is Google. 89.82. Get it under 90. Just simple as that. Get this one under 90. Buy it and forget it. I mean, keep adding to it. Just buy it and forget it. I'm adding to this in my retirement portfolio where I don't have tax events. And it literally is just, hey, I'm just going to buy it. If it goes down to 70, I'll buy more. I'm just going to forget it. And, a great example of just buying and forget it for like a year or even 6 months is Boeing. Look at this. People were making fun of Boeing at like 120, 110 in that neighborhood. They were making fun of Jim Cramer. Again, Cramer sometimes, I don't think he bought at this level. I think he was buying it at 220. But it's close to 200. This has all the confirmation in the world. It is, at 55 on the RSI, I probably wouldn't buy it. Look at the MACD kind of just hovering around there. But it's a good example of one. Again, if you're a member of TrendSpider, I have shared with you my Vanguard, the ETFs that are just buy and hold for a long time. This is the high dividend yield Vanguard ETF. So I scanned that group, and we came up with 108.26. Not a bad price on this one. Let's see VYM. We can look at the 52-week range. 52-week range, it is 6% below. It's a 52-week high of 115. It's 14% above its 52-week low of 94. Year to date, you're only down 3%. It yields 3.8%, 7%. So you've beat the S&P by quite a bit on this one. If you are a member of TrendSpider or a subscriber to TrendSpider, I should say, the spider sectors, I think I've shared this one with you guys as well. XLC, communication services, 47.81 is the price. The algorithm loses you 34%. Buying and holding this one loses you 29%. The average win is only 2%. I'd use this as something if you're looking to get into the communication sector. Maybe you're looking to get into Verizon, which was a final trade. 37.68 is the price. That was on December 22nd. You've got your dividend date coming up on January 9th. You got your earnings coming up shortly after. If you're looking to get into Verizon, XLC just had a cross up. Another sector that just had a cross up, the industrials, XLI. So 98.38. This one, again, makes you 18%. The algorithm makes you 18%. Buying and holding makes you 12%. Your average win is 6.91%. So, again, use this to try and gauge, hey, is the stock that I'm actually buying in a sector that's in a upward trajectory? That's the way I use this. Another sector that had a cross up, XLP. This is the consumer staples. And this is one that is expected to go up next year, 75.18. The algorithm makes you 13%. Buying and holding makes you 11%. The average win is 4%. Again, use these as you will. A couple others that I wanted to go over. Disney. We had a cross up on Disney. I went over this. 88.03. If they get into a deal with Netflix, this one's going to fly. I have no doubt in my mind Iger's going to bring this one back over 100. That's just my thing. Delta Airlines, we had 70% of the Southwest flights were canceled over the weekend. They're in a major problem. We had a cross up here, let's see, at 33.16. You just got out of this one with a slight loss, but 33.16. They got their earnings coming up on January 11th. I can't imagine that they don't announce crazy earnings. Duke Energy, this is just a monster. 88.89 was the original one on October 13th that I brought up. This one is at 102. It's just crazy, crazy good. I wouldn't buy it here. You're up at 58 on the RSI. But I wanted to bring this up because I brought this up. This is just a crazy good stock in a sector, utilities, that's continuing to go up. EQT. Is one, 36.22. This one makes you 83% with the algorithm. Now buying and holding makes you 187%. EQT, as far as fundamentals goes, you've got a 7 PE, 1.66% year dividend, performance year to date 66%. This is an energy company in the oil and gas, and this was from the energy sector. So if you have TrendSpider, you could have done all of this yourself. The review using my algorithm, remember to sign up. If you've made it this far, hit the 5 stars either on Apple or on Spotify, because those are the only 2 places. I think 10% of my people listen on other platforms. But hit the 5 stars. Hit me up with any questions that you have. I will be traveling one day this week, so I will not be doing a podcast at one point in time this week. But as far as the year end goes, you guys have a good list of what I've done or what I'm going to do this week. I am not doing a lot of buying this week. Going into the year end, there's not a lot of, what a lot of people are doing is really just holding off until next year. There's a lot of big money that is just sitting on the sidelines. And next year, I think we see a trading range. I think you've still got these fears of recession sitting out there. But keep an eye on my Twitter. Keep an eye on the private Facebook group. If you haven't joined, the link tree is in the description below. If you have any questions on taxes, consult a tax professional. This is just my look at my personal taxes. I do my own taxes. I use TurboTax. I could probably do better with a tax professional. But remember, I always tell you guys, understanding taxes is just as important as understanding where you're getting into a stock. You have to understand what are the taxes of different investments. I posted a short on YouTube about this guy who says, yeah, the rich don't pay taxes because passive income is not taxed. FYI, passive income is taxed. This douche didn't know what he was talking about. He was talking probably about lines of credit. And being a wealthy individual, I do get offered lines of credit. When it's cheap, it is fantastic. Instead of paying taxes, you pay an interest rate. And I can tell you, as a rich person, what would you rather pay? You can take a tax event by selling a stock and pay 40 to 50% to the government in taxes, or you can take a line of credit against that stock, that portfolio, and pay. In previous years, you were paying one. I was getting offers of 1% and 2%. Today, you're getting offers of 4% and 5%. Seems like a lot more expensive, but when you're saying, hey, I can do that, or I can sell my stock and pay 40 to 50% to the government in taxes. Which ones are you going to do? And Elon Musk is going to have the biggest tax bill in history again this year. He's just, he doesn't manage his money well. He's just not very good at it, but he doesn't care. This is a guy who basically takes his money and invests it into other things and works 24/7. Guy's a genius. He's a monster. I don't have his work ethic, but hey, the world needs people like him. So kudos to him. Hit me up on anything. The 36 minutes, pretty good today. Have a great day. Enjoy your first day of trading during the week. God, and I hate Congress, by the way. CNBC is going over this. Congress elects Santos, who admits to lying, and there's no backlash. Nothing's ever going to happen. Yeah, he admits to lying. He lied completely about who he was, where he worked, his qualifications, try and get into Congress. Gets into Congress. Nothing will happen. F those people. Yeah, sorry. People I hate. Jim Cramer. And, oh, by the way, yeah, that brings up a great point. I don't charge you guys for a lot of this stuff. I want to, make sure that you guys know a lot of the courses. If you guys are looking at courses, hit me up and ask me, because a lot of these guys are charging. I got an offer over the weekend from a very well-known YouTuber who has a channel and offered me to sell his course. He said, hey, I charge $1,000 for my course. I'll give you 50%. If you sell it. Everybody that signs up, I'll give you 50%. I looked at the course. It's basically moving averages, identifying, above a certain moving average. Guys, don't pay $1,000 for something that's not going to help you. The education from somebody on YouTube is just a system that works for them. I would tell you, invest in something like TrendSpider, which is going to allow you to develop your own system. And I will help you develop that own system. I developed my algorithm. There's been tons of people who have contacted me over the past 2 months since I became a preferred partner with TrendSpider. I do get a commission from TrendSpider when you sign up, but that's why I'm giving you my algorithm. It's something that I've worked hours, years on developing. It is so simple. It is almost embarrassing to give to you guys, but it provides the tools to you guys to be able to look at stocks the way I do, to identify opportunities. Do not pay somebody $1,000 for a course where you're going to just basically learn his system. Figure it out for free and develop your own system, because you have to be comfortable in trading it. So, sorry, there's my rant. Okay, hit me up on the socials. Let me know what you think. Thanks. Share, export song to disk. Thanks, James. Yeah. I actually, you know what, James? I think, my personal opinion, I like when people are share more of their personal stuff rather than say, hey, I think you should buy this stock. And I think recently I got into, hey, I think you should buy this stock. And I haven't been, fully vested with you guys. So trying to share what I'm doing. And yeah, it's probably not the greatest time to be doing this. Like I said, all of these stocks that I'm looking to sell, probably at their lows. The stocks that I'm looking to cover, I probably could hold on to and make money. But because of the tax rules that I have in my portfolio, I can buy back in 30 days. So, yeah, Tom goes nuts. I was looking at trying to put a restriction in on the Facebook group where people could only post once a day. Because one thing I hate, I am not disclosing that, Zephan. No, I'm not putting that out there. Because while I don't agree with A, the price, B, the strategy that, the value and the strategy that he's teaching, there are people who pay it. And I'm not going to kill somebody's business because he's not stealing money. I just don't think it's worth it. And that's a personal opinion. That's not, I'm not going out there with a fact that it's not like, if I knew Sam Bankman-Fried was taking your money and investing it without you knowing, yeah, I'd tell on that. But this one, he's really just doing education and people are paying it. So I would hate for one of my listeners to come back and say, hey, I paid this guy $1,000. And all he taught me was when you're above the 9-day, you should buy. And when it goes below the 9-day, you should, and it's not that simple. His system does have some complexity to it. And I didn't backtest it. So I don't know, maybe it does provide, thousands of % of return. But it's one of those guys, it's kind of like, who was it? I think MKBHD. I think that guy has a private Discord and stuff too that people pay to get into. Makes no sense to me why people pay for stuff like that, but I'm a guy that's pretty cheap. So, I do want you guys to start using ChatGPT and stuff, though. I'm just amazed at that. I'm going to do a new episode. I'm going to get off here, too, probably pretty quick. We got family coming, and I was already told I need to be involved in this. So, hey, did you guys listen to the podcast at all this weekend? Anybody listen? It's live because I wanted to know if an ad showed up or not. Oh, and by the way, YouTube exclusive. Zip Trader Charlie brought up last night. And FYI, he was not the YouTuber who contacted me. I have a lot of respect for that guy, even though his course at $400. The value that Charlie brings you is not the course. The value that Charlie brings you is his morning briefing. Kind of like I do. His, though, is definitely more geared towards the retail trader who's gambling. And I don't mean that in a bad way. I just mean that there's different strategies. But here, he did say in his thing last night that UVixie was going to be a big play for 2023. And it's ironic because it dipped down all the way here to $6.93, and you're at 706 right now. Stefan, you're always on live, man. Honestly, don't waste your time. I literally just record what I say here. I am going back this week, probably Wednesday or Thursday. I might do a quick podcast while I'm traveling, but most likely no. I'm just going to copy this whole thing. I'm going to title this Tax Loss Harvesting, Selling Gains, or I should say Maximizing Tax Benefits End of the Year. Let's just say 12, 20, 27, 22. Here are the stocks I'm selling at a loss, and the stocks I like it. Kind of an example, Zephan, was last week I know that I want about $10,000 in the financial sector between Bank of America, Wells Fargo, Citi, Goldman Sachs, JP Morgan, Morgan Stanley, things of that sort. I want about $10,000 in there within the next, I'd say, month, 3 weeks, 3 weeks. So last week I bought, I think it was about $3,000 worth of Wells Fargo, and I didn't buy more on its way down, but I'm waiting for the others to kind of take a dip. And again, remember I'm ADD, so I get overwhelmed. Look at all the stocks that I just went over that I'm selling. The list is long, and the ones that I'm selling, I don't like to overwhelm myself with buys and sells, so I kind of focus myself. So I'll probably be looking in the new year at buying some of the Bank of America and things of that sort, and that $10,000 might go up just based on the economy and the market, because I do think that some of these financials, specifically Bank of America and Wells Fargo, I think they're just too far down. Goldman Sachs is up there. JP Morgan is up there. But those two in particular, they're good banks and their earnings are coming up. And I think, I could play them for a short term. I think I like them long term. And this is kind of, I always tell you guys, identify the in and the out before you get in and before you get out. I'm just as bad as the regular person. Honest to God. If you stick to a strategy, you're better off. I wiggle on my strategy a lot. And the stocks I'm optimize for 2022. Moves before 12/31. Okay. We're going to put an X, and we're going to put these there. Oh, yeah, I didn't look at REI. Man, I had that on my list, I thought. Oh, look at that. Yeah, what did I tell you? 221? Do you have 10% gain on it, Zephin? I'm going to also anchor. I'm going to get my little blurb. I'll take a look real quick. I'm going to put this. I got to say 50% off. Dude, great trade. Don't be greedy. Copy. I got a lot. By the way, I got a great note from a listener yesterday who said he loves my Seinfeld references. Oh, what? No, it's, what is it? EMB, I think. Yeah, EMB. Oh, stop. Oh, man, I gotta do this all again. Discard. You still on E-Trade? That's your problem. I could tell you on Fidelity what my average purchase price is within 30 seconds. But I think it's Barbara who listens, hates Fidelity. They screwed her over. And I don't want to say they screwed her over. They just made things difficult for her, and I don't like that. That 35-year chart, by the way, of Ford. Dogs needed to go out to say good morning. Yeah, here's the thing. It's the debt on REI. That's the bad part, Zephin. I don't know that you necessarily want to hold it for long term because they do have quite a bit of debt. If you're going to hold an energy play for long term, I would suggest something a little bit more mainstream. And when I say mainstream, it doesn't have to be like the big guys. Like I have MPLX. You can go with PXD, which has a huge dividend, which, you know, will compound year over year. Compounding is just the craziest way to make money. We're going to take that out, and we're going to tweet that, and then we're going to tweet again. I hate that I have to promote the damn podcast this way. But when you look at that view count, and when I look at how many people click from these stock symbols being up there, it's crazy. Crazy. And we'll put SPY, QQQ, TQQ. I'm going to pull up Tesla. We did SQQ, SOXL. Oh, okay. I'm going to do a third one. Tweet, because I didn't get tweet another one. Amazon, XPON, LabU, AMD I did, CCL, NVIDIA, Neo cut their production, by the way. AMC, SOXS, PBR, AT&T, Intel, GOGL. A lot of people are buying GOGL. Else Lucid ain't making money. I need to put in WFC, SPXU, SPXS, Microsoft I do have in there, MPW, and Palantir. You know what? I'm going to put in APE and GME. People still follow GME. Okay. Okay. Oh, come on. Tweet. Something went wrong. Don't fret. Let's give it another shot. There we go. Okay, where's my profile? Let me show you guys. Let me go back into OBS and show you guys. So here's my Twitter profile. So I just tweeted out 3 of them, I think. 3 of them, yeah. To start the year, big tech made up $10 trillion in market cap. Here's the end of the year. Why big tech do you think reaches previous highs? First, Meta, See? There you go. Rahul's great, by the way. You should follow him. He's got great insights into the market. This is an indicator that was built on trading view that we can do actually on TrendSpider, and I like it. I want somebody to build it, so I tagged TrendSpider and they wrote me back. Here's your Fibonacci levels for the week. Ron and Sana, China is rapidly abandoning its zero COVID policy. Big for Moderna. This Jake posted. Jake is from TrendSpider. QQQ NDX 2022 back testing he did some back testing, which shows that we could be in for a bounce. That was an interesting. I posted this. That's right about realtors. And this lady, Swing Pony Trades, she posted that she finally, and it's a great book, by the way, Volume Price Analytics. I went into ChatGPT. This is what I wanted to show you, ChatGPT. And I said, summarize this book. It gave me, let me see. I'm going to go into chat.openai. Look at this. Here. I am going to post this in the chat window, because this is such a good tool. Oh, it doesn't even come up. Son of a bitch. You know what I'm going to do? I'm going to post this response in the Facebook group. Because I have to go, I'm going to push you guys over to Active Trade. I'm going to post it in the Facebook group. So your goal is to join the private Facebook group, because if you're listening, it's on the link tree down below. And you can, it's on the symbol. Let's see. I don't want to manage the page. I want to go to the group. Gaming. Your profile. There we go. Member requests. Nope. Okay. Here. I asked ChatGPT to summarize, what is it? Volume Price Analysis, the book. Volume Price Analysis by Anna Cooling. By Anna Cooling. Okay, and let's just take a picture of the book. Copy image, and we will paste. Oh man, it's not going to. Let's see. We have to save the image. Save image as desktop. And let's see if I can post it now. Okay, why is it? Oh, there we go. Desktop, there we go. Post. Okay, it's in the Facebook group. So you can read the full summary. It's amazing. The full summary. It is great. Okay, and with that, it is 9 o'clock. I got to get out of here because I got to shower, eat breakfast, and do all that stuff before family comes over. Stefan, good luck on REI. And I think James is in it too. James, you're in REI as well, right? By the way, I do think Boyle is due for a... Here, let's go back to... If you guys want to know what to trade today, SOXL, I think, will have a pretty good day. It's due for a little bit of a bounce. I don't expect this one to get back to its 200-day, which is at 12, but I would expect it to get to 10. I would say Boyle, probably due for either a level or a bounce. I mean, the RSI is at 29. KOLD has just been on a legendary run. And what I'm going to start doing in 2023 is start doing, hey, let's look at one for a week. And we'll summarize on a Friday. But wow. For some reason, the stock market has taken a leg back. Oxy is up slightly. Devon is up slightly. Some of that money that I, by the way, that I raise through selling is going to be put right back into oil. So, okay, I'm out of here. It's been at least an hour. You guys have a great day. I will talk to you tomorrow. And if you're not signed up for TrendSpider, you probably should. I think everybody in here who is would probably tell you it's a pretty good investment. It's on sale, $429 for the year, 50% off for that. And you do need the middle level, which is elite, to get the back testing that I have, which is where my algorithm is. So, okay, I'll see you guys. Have fun. Look out for shorts and stuff on my YouTube channel. I'm trying to post some shorts. And some AI content. I'm going to start posting that stuff too. The AI I'm just fascinated with. And by the way, I love this MacBook. God, I love this MacBook Pro. This 14-inch MacBook Pro, I guarantee you, unless you're an absolute beast with coding, it handles all my 4K video editing that I do, the 360, Insta360 editing that I do in Final Cut Pro. It's crazy good, crazy good. So, okay. See you guys.